What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 8th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a wide range of topics to discuss. We're not only taking a look at crypto markets, but we'll be diving into a wide range of data from real-world economic data, equity markets, as well as bonds. Outside of that, though, two quick announcements. Not only is the video sponsored by eToro, and for those of you who don't know, eToro is a social trading platform that allows you to interact with traders across the globe. And as of recent, they launched their copy trader feature on their platform, so you can copy many traders, including myself. And you can not only view our stats real time on how we performed, what portfolio holdings we have, but if you find someone you like, you can simply click the copy button, and real time you can trade alongside some of the leading traders in the crypto space. So it's a really cool system. I recommend you guys check it out, and the link is down below in the description. And the second thing I want to share with you guys, seeing as we're on CoinMarketCap, is that towards the end of the video, I'll be having an interview with Spencer Yang. It's just a quick update video to let you guys know about the conference that's coming up that I will be speaking at. It's going to be a really fun time, and they also talk about some really interesting updates with the CoinMarketCap platform. All right, so we've got a lot of things to discuss, guys. Let's go ahead and dive into it. Starting off here, we'll take a look across the board for cryptocurrency markets. Most cryptocurrencies are down at the moment. There is no really positive trend in the market. We're down about 2 to 3% on average right now. And again, nothing too stark. We've seen valuations drop to around the mid $240 billion range, about $244 billion last time I checked. So again, right around there. Yep, it hasn't changed since I last looked at it. And we can also see as well, this is not just coming through on Bitcoin, it's coming through a little bit on altcoins as well. And we can see Bitcoin dominance still keeping on the trend of the downside. No serious decline, but at the same time, we can obviously see with our indicators that we've looked at on TradingView, nothing has changed on the trend. And until something does change, I'm confident more on my altcoin positions. That's why I've been adding in this case. I haven't been doing any trades. I kind of stepped back from trading when we saw a little bit of the pullback on altcoins, in this case when we had a leap up in Bitcoin dominance. So I'm just focusing now on averaging in so long as the trade is going our way in this case, right? If it starts to reverse, I'm not going to be biased. I'm going to move out, and that's how you should trade, guys, in this case. You should not be, I'm not going to tell you how to trade, but you shouldn't be biased in this case towards a personal viewpoint if you're positioned somewhere, right? If something is signaling to you that things are changing, you've got to readjust, right? So that's just a general principle, I think, in life. So that's with anything. Sometimes you got to go against your gut. Sometimes you have to go with your gut, right? But it really depends on what your time frame is with these kind of things. Now, let's go ahead and talk about Bitcoin. I got to say, Bitcoin, never below 9K, right? Well, Bitcoin is now sitting at 89.75. If you look across the board on most exchanges, pretty much every spot price you're getting for Bitcoin is dipping a little bit below 9,000. On the weekly here, this doesn't look very good, right? It's starting to look like we're going to start faltering over on most of our gains. If we take a look at the daily here, doesn't look any prettier. Looks like it's set to almost kind of break down below the previous low here, right? So the previous low we had was 89.50, so we're very, very close, just about $25 off. So it's really a matter of where markets go here. And another scary thing is that volume is really low. So if for example, one or two whales or something dumped on spot prices, it could very well drop it. But at the same time, out of nowhere, some buyer could come in right when it goes to 89.50 and it could prop it up. We have no idea what's going to happen, right? So there's no reason to stress about it. I have a general game plan in this case of either way, right? So if Bitcoin were to decline down here, whether I'm more interested in altcoins or Bitcoin, I'm averaging in. If it goes down in this range, yeah, I'm personally, I'm going to be buying in and stuff because, again, I'm not fretting about this, guys. I think I've already kind of shared with you. I've done videos on it in the past. So for those of you who maybe haven't seen it, I'm following my how to simplify Bitcoin investing strategy, right? And it's very simple. Anytime we are in 30 to 40% correction territory from the recent high in the cycle, it doesn't matter. It doesn't just happen to happen after. It's not just when you've been in almost a full trend downward decline. You can still, in my opinion, with this strategy, I will still buy in if we're still 30 to 40% down from the previous high. And in this case, we're already 36% down, right? So I'm averaging in when we see dips. And when I see extra significant additions to that dip, I'm still averaging in because my time frame is not in the short term. I don't care about this bump up and I don't care about this sell off in Bitcoin. They're minimal in my game plan. My game plan is to ride Bitcoin for the next cycle over the next 2 years into 2021. And as we step into 2020, again, I think we've got a lot of exciting times coming ahead, right? As we talked about in the macro report video, I really wish, if for those of you guys who watch the updates and stuff, And I'm just being honest here. A lot of the YouTube titles and stuff I see get more views are obviously focused solely on Bitcoin's price. But you guys should watch that macro report because we not only dive into a lot of interesting markets, we talk specifically about how we're not going to pass 20K until post May of 2020, if history tells us anything. And the reason for that is the halvening. The halvening has been the clearest catalyst across the board for when Bitcoin markets start to enter into a new uptrend, right? So what we can expect over the next, 6 months here, right? Or actually, I'd say a little over 6 months here if we include some of the month of November, right? Until we get that happening, it could be very likely that we go to 14K or 16K, but we are very much likely not going to get to 20K anytime soon until June or July, right? It usually happens a little bit post after the happening. If we look at history, okay? So I'm just sharing that with you guys. I'm being realistic. I'm not trying to be overtly optimistic and trying to sell you guys on a fake dream that Bitcoin's going to $1 million. The more we think about this in a rational way, the much more comfortable it is to be invested in cryptocurrency markets. It feels much more understandable. You understand that this is a volatile asset class, that it can make these kind of swings because it's early on, right? But interesting thing to note, I mean, outside of the discrepancy we had the other day where it went up 42% in like less than 24 hours, interestingly enough, Bitcoin volatility has actually declined over time. It's a big misconception. Bitcoin volatility, as well as gold markets and all these things, as they expand in valuation, volatility declines. So that's what's going to happen to Bitcoin over the next year. So we're not going to get the kind of swings that we get for these longer cycles. And that's why I focus on the longer term. That's where the returns are, at least from what we've seen historically. When you focus on these bigger moves, it's much simpler to call and it's less stressful. Okay, so I rambled on, guys. In the sense of the daily move, again, I don't like what the weekly chart looks like, but it could change on a dime here. This could turn into a green candle. I'm just simply waiting for at least 2/3 of my indicators to show up. The stochastic RSI would technically be bullish here, but I don't like how it's not going absolutely vertical, as we tend to see when it enters into the neutral zone here, the purple territory on the indicator. And along with that, even though the divergence is closing on the MACD, we are still far away from a cross, and the squeeze momentum indicator has still not had a higher week, right? So I'm not getting eager in this. I'm not fully confident that we've hit a full trend reversal if we're just ready just yet, right? So I just wanted to share that with you guys. All right. So there's a few cryptos we talked about yesterday I'll revisit. I don't really have the time to look at a crazy amount of individual altcoins. I know some of you guys want me to take a look at some different altcoins. But let's go ahead here. We'll take a look at XLM. XLM never really had the follow through the other day. It's holding up nicely on previous resistance here in the sense of Bitcoin. Take a look at the USD chart as well on Coinbase. What I would say for is you'd want to see this come down, and unlike over here where it faded all the way back down, you'd want to see it hold up here around 7 cents and start to cup up for a potential trade. But I don't know if I see that. The candle doesn't look like it's speaking that to any degree. It looks like we're going to likely have another fade out to some degree in this case. But we'll actually see probably by the end of the day and stuff if we can actually hold this. If it breaks below 7 cents, I don't think I'd be very interested in it. It looks like it's going to be another fade out. And that's really sad that this is the market reaction when they removed like half of the supply of their entire token. It's pretty stark. So I think it shows you, I mean, like we're not in a full swing altcoin market for all of the cryptocurrencies. It's going to be a very select few who actually win out in this next cycle, so we have to be cautious. Another one I'm still watching, NEO. We talked about this the other day. NEO is looking very good. I like this. Higher lows, almost looks like it's building up an ascending triangle here in the daily. Some people call it a flag. A flag is when there's lower lows and lower highs after a breakout like this. So it wouldn't be technically a flag. This does look great though. I mean, basically not a bull flag. A ascending triangle in this case is bullish, right? So it's good to see here, and we'll have to see if we get a continued breakout. If we got above like 1,300 sats, this will probably really start to rip. But I'm going to be patient on it. We'll take a look at the USD as well as see what we can take away from it. Actually, I'm going to get off of, I'm going to get the tether pairing because it's not going to be consistent. There we go. This is the real pair. So again, yeah, it doesn't look that bad. I would want it to, again, hold around this range, set a higher low, and continue higher. And in that case, you probably need it above 1150 for momentum to really kick in. And I want to see volume coming as well. That's my standard if I buy in NEO. All right. So let's look at a little bit of crypto news, then we'll dive into some of this interesting economic data. For those of you who are DeFi freaks like myself, who are very interested in all of the interesting experiments that are going on, from the lending, the smart contracts like Compound that you can lend to projects like MakerDAO that are trying to build out censorship-resistant stable coins that use Ethereum as collateral. MakerDAO is proposing, in this case, some of the founding members and stuff are proposing to raise the DAI ceiling. Now, many of you out there might have noticed that DAI only has around like 80 to 90 million coins at any given time over the last few months. There's been actually a reason for that. There's actually a mandatory ceiling that's been implemented in this case to prevent too much DAI from being created. And I think this has played a little bit of a role in why it's gotten so expensive to create DAI. It's not the only reason, right? The stability mechanism is still definitely much of an experiment in MakerDAO as a company. As we've talked about, I'm very pro DeFi. It's definitely experimental, especially just having ETH as collateral. Well, they are now working towards making some very big changes to MakerDAO. And not only is one of those proposals to have multi-collateral DAI, where instead of just ETH as the collateral, you have a variety of different assets. I'll explain this for those of you who may not know and stuff. It's completely fine. It's not many people talk about it in the crypto space, but it's a really cool technology. But along with that, raising the ceiling from 100 million. So letting more than 100 million DAI being created. So, all right, to start off from the ground up, I know we've done a video on stablecoins in the past, but to explain what DAI is for those of you who may not know, DAI is a stablecoin on the Ethereum network. It is an ERC20 token, just like True USD, or I think USD Tether is slowly moving over to the Ethereum network. But you also have, Coinbase's stablecoin as well, USDC. You have all these different stablecoins built on Ethereum. The difference with DAI, unlike all those others that supposedly have dollars in reserve, they actually use Ethereum as collateral. So you can generate DAI if you have Ethereum, and what you do is send it to the smart contract. It's an autonomous smart contract. MakerDAO does not own the funds. You send it to that smart contract, and with a certain amount of ETH, you can actually get a fraction back in DAI in this case. And you can use this DAI however you'd like. You could use it to purchase more crypto, essentially kind of margin trading in a sense. Some companies, some ICOs have put up their ETH into the DAI smart contract, and they've actually gone out and used some of the DAI to cover short-term expenses, things of that sort, right? So there's all kinds of use cases. But they're now thinking about raising this ceiling a little bit higher, right? And the Maker Foundation proposed a new debt ceiling of 120 million DAI. It's not much. And the reason why they're keeping it limited like this is because as a DAO, there is some centralized control from the voters. And they want to make sure that they don't have too much ETH locked up and then something goes wrong, right? Because there can be liquidation events. If the ETH value drops below the DAI, this is why they over-collateralize it. They have more ETH at a higher market value than the DAI that's created. If that ETH drops rapidly on some kind of flash sale, that's going to mean a mass amount of liquidations for DAI, right? So it's important to take these slow. And they've also got multi-collateral DAI coming soon that's going to help to alleviate this. The problem I see with multi-collateral DAI is I really wonder what is going to be excuse me, I hit my coffee mug there. What is going to be the collateral that people use? And I think that they're pretty open to a wide range of collateral, but the issue I see is that when it starts to be collateralized by non-centralized assets, that's when it can become a risk. Right? If you used a gold-backed token and that gold isn't somewhere safe or in an area where it could be seized or stopped, to where it could cause a lack of value in the underlying token on the blockchain. But I don't think that's really, that's kind of like a doomsday scenario, right? And this is why projects like Reserve and everything, these different stablecoin projects have been using multi-collateral to actually kind of alleviate the stress of just having Ethereum as collateral. So anyways, I just wanted to show this to you guys. If you guys haven't learned about this, I really recommend you look into it, right? If you stuck around through all my rambling and it's a little bit overwhelming, I promise you it'll be totally worth it if you look into MakerDAO. It's a very fascinating concept. They've been around since I think really it's been the later part of 2017. I've been keeping up with them, Kyber Network, all these really cool DeFi projects for some time. Now, let's dive into some traditional market data. Well, the first thing I want to take a look at is central bank balance sheet data. And we can see here that the Fed has not only been cutting rates, they've been adding to the balance sheet. They're making up for a lot of the gains they had compared to other central banks. And when I say gains, I mean that they were making progress, in this case, to actually reduce their balance sheet, increase interest rates, and they have flipped on a dime. Powell is now in defense of equity markets. And trust me, it has little to nothing to do with the actual economy. It has nothing to do with that. It has to do with keeping up and propping up the asset bubble that has been built over the last few years, right? Keeps mortgage rates lower, so housing prices go up. It keeps money cheap, so investment in equities and properties go up. And with the balance sheet and the pickup of the treasuries that we've seen, right, and the help as well into the repo market, this alleviates not only pressure in this case for treasury markets in this case, right, but along with that, it provides cash in this case, right? When people are exchanging these treasuries for cash in the short term to meet reserve ratios, it's the same kind of short term thinking that we did back during quantitative easing. It's getting cash into the system. Take off your other assets. Here's cash. Go invest, right? So that's basically what the Fed's doing here. It's coming back to meet up with all these economies that really haven't alleviated yet. The only one that was really doing it was the United States. Japan has been building up. The ECB barely tethering, and also China being pretty much flat over the last 6 years. But the thing that I want to note is that we are now seeing a net positive add to the central bank balance sheet. For a short while, we were negative for a year-over-year change. Now we got to be back to positive. It's a crazy world, but again, the Fed's going to use whatever tools it can, as well as other global central banks. And interestingly enough, right as we started to tick upwards, you can start to see the trend changing here. Follow the blue line. Total assets of 3 of the major central banks, and this isn't including China, which will play a role into the equation as well. But along with that, you can see equity markets going right back up, right when the Fed starts adding. Interesting enough. So I want to go ahead and dive into this huge set of awesome economic data. The Daily Shot Brief put a huge piece out yesterday with a ton of charts that I love. Sometimes they can be kind of not irrelevant, but just not very interesting. But I think they put some really good stuff out. So here's one that they cited from the Federal Reserve Bank of Dallas, saying consumer surveys suggest economic conditions remain healthy, but growth is slowing. And it has a few different charts on it that I really like. So we'll go through a few of these. I have them here. First one here is talking about yield curve inversions and just kind of looking at, when do recessions play out? How long do we see the yield curve inverted? And this is one that they showcase, the 1 to 10 year Treasury yield spread, right? So we can see here, for example, this is the spread between what you'll get on the 1 year versus the 10 year. And we have these very small windows of time historically over the last, 3 decades where we tend to get these small bumps where for a little while we have a positive spread in this case rather than a negative. And that's usually a precursor. It's not a direct sign that the recession is happening right then and there. It's a precursor about a year to about 6 months out, right? We can see that happening consistently, and then that yield starts to, or the divergence or the spread starts to decline into recession territory, right? So this is what we want to look for here, guys. This is some really interesting economic data. And I think it gives us a little bit more of a less fearful and more conservative view on where markets are going, right? It means that we've probably got one last run up in equities to go. Again, as I mentioned, there's a few hundred, there's like another extra 100 something points on the S&P 500 before we get an absolute double on top of the previous resistance of 2000, 2007, and 2008. Or I guess 2007 was when the actual market peak was, but I digress. You get my point, right? So in order for us to have a full correction, a 50% correction, we would want to get back to that level or roughly around that space, right? Now, another thing as well that I want to talk about is the change in level and change in unemployment. So you can see here, for example, this is one that I really like down here. It shows the level of unemployment gap minus an average of the level and 1 year change inverted scale. So it's basically from... God, it's a really long term, but what I'm getting from it is it's the year-over-year change in unemployment tracked over time in this case, right? So it's continuously tracking on a monthly basis the year-over-year change in unemployment. And you can see the general trends here, right? When 2008 hit, we started to see year-over-year unemployment was, again, growing. In this case, it turns positive because more people were unemployed, and then it starts to decline. And now we start to get towards a position we're starting to see year over year in this case that we're inverting in this case, that we're actually seeing a huge decline in this case. So again, I think this is really interesting. If we start to take this into account, if we look at the history here, we can see that it's not very long that we hang above this range, that we hang above 0 on the inverted scale, right? So very, very fascinating stuff, guys. I think it's a very interesting data point. And again, we can see that somewhere while we're actually up in this range is usually when we hit a recession, right? And we're already well beyond where we were in 2007. Okay, so important thing to note. But again, I might be reading the terminology wrong. Either way, you can see the correlation with the gray areas here, which is indicating of recession, right? So that's what we want to look for. Data like this can really help simplify it. And you don't want to use one indicator. You don't want to let something like this get you fearful. You want to look at a basket of indicators and indexes that give us some kind of understanding of where the economy is. All right, so a few more here. So we've got slower starts in construction activity in 2020. So we can see here that there's a general trend here, a topping out here. We've been setting lower highs on the construction PMI. And along with that as well, construction starts advancing for 9 months. So again, projects, what my understanding of this would be, I don't want to talk out of my rear end. My understanding of this would be that, with construction projects, and this goes with most industries, this goes with commodity production, in this case for like oil and natural gas, you plan these things out months in advance. And you usually have to get permits and contracts for that. And because of that, we can get some understanding as to where things are going a few months ahead. Well, we've already had some of the 2019 data, which has obviously clearly shown that we've started to top out after a really nice rally in 2018 and early 2019. And we're starting to see a decline back down to some of the lows we saw back in 2018 and 2017. And if we started to break below that, that would be really concerning. It would, if I was to look at it as a trader, right, I would say, oh my God, we're now starting to break below the average kind of low range for the last few years. And we're going to get back into a territory where we're not seeing as much construction builds, right? We're coming back down to what we saw in 2015, etc. So if this really continues to pick up, it's going to signal some weakening signs in the economy. Now, to talk about Saudi Aramco, we did a whole video talking about the IPO that's going to be launching. It's a $1.5 trillion IPO on average. We don't really know what the valuation will come out as, but this is going to be the largest IPO in history. And in fact, it's going to be one of the largest, if not the largest, publicly traded companies, right? It's going to be alongside Apple, Microsoft, some of the big players. And if we take a look here, this is the life of proved oil and natural gas reserves that Aramco has comparative to other companies. So you take one of the largest companies in the United States that has about 17 years of reserves to continue producing the way at the same rate that they are. Aramco has 52 years of existing supply. Now, I have no doubt these companies are going to continue to expand and they'll maintain these years, if not expand them. There's always been more and more reserves, right? But along with that, it has much more to do with the cost of production. And this is where Saudi Arabia does have an advantage, a massive advantage. The United States is the biggest producer of oil and natural gas now. There's no doubt about it. We have become the largest producer. We've outpaced Saudi Arabia. We've outpaced, we're getting very close to coming on par with a good majority of OPEC nations. We've outpaced Russia, all these areas of the world that were huge commodity producers. But for us, and a lot of the companies, for example, like Oxy, ConocoPhillips, Marathon Oil, Chevron, ExxonMobil, Shell, Equinor, Total, BP, all these companies, they're mostly generally Western oil producers. Their prices are anywhere from around 20 to 25 for the most part. Saudi Aramco can produce stuff for less than $10. They can produce a barrel of oil for less than $10. Between the extraction, the employment, the refining, everything cost them less than $10. It's pretty fascinating. That is absolutely fascinating. I'll be honest, a lot of that probably has to do with cheap labor costs, which is kind of upsetting to me because of course I don't want to think that, the world is powered by people, who aren't making a good wage, but that's a big reason for it. And then also it literally flows like water in Saudi Arabia. There's just so much geographically. But anyways, very stark correction. I mean, like you can see here, it's more than a 33% decline from the nearest cheapest competition, right? More than a 33%. So that's the kind of, very interesting proposition that Saudi Aramco puts forward as a company comparative to competition. It can remain profitable in pretty much any environment. Even if we had our doomsday oil scenario where it's 20 to 40 bucks a barrel for the next decades, Saudi Arabia is still making money. It's printing cash. So that's the thing to consider there as a company. So this is another interesting chart here. I think this is why so many people, including myself, are genuinely so distraught by the divergence in how equity markets are performing versus the real world economy. And this is a general UBS, so the United Bank of Switzerland, weighted global growth surprise index. So this is actually showing a general sense of actual global growth against the S&P 500, which is the orange line. So much like what we saw back here in 2014 and 2015, when I was really getting into trading in equity markets, we saw this big divergence. There was a clear slowdown in economic growth. Emerging markets were slowing. The United States was slowing. The EU was stagnating. Pretty much everywhere in the world was looking bad, and equities still kind of chugged along and lived in la-la land. Everything was okay until we had the flash crash in the summer of 2015 to kind of play catch up and close down on some of that divergence. Now, this isn't the one indicator index you can use. Again, use a basket of them, but you can see there was a spread here, right? And it didn't matter which one you were looking at. You saw a pretty consistent trend from reality breaking away from what was really going on, right? What was going on in equity markets. So. All right, so I've rambled on enough today, guys. I hope you all enjoyed this video and some of the topics we dived into. If you liked it, drop a like. If you guys want, you guys are welcome to, not only engage in the comments, let me know what you think, but share it with some family and friends. Get your friends involved in this. Get them learning about the markets. And if you got someone, I know you don't want to come off like a nerd like me who absolutely like geeks out over finance. But again, share this with your friends. It's important to get this stuff out there. And I think it's a fascinating topic. To me, it's actually it's intellectually stimulating. I'm definitely no intellectual by any means, but I do enjoy looking at this stuff and having a decent degree of understanding what's going on. So again, always appreciate you guys joining me. It means the world to me, and I hope you all have a fantastic day. But let's go ahead and dive into the interview with Spencer Yang from CoinMarketCap. Alrighty, everyone. So in today's video, we're going to be sitting down with Spencer Yang, who's the head of special projects over at CoinMarketCap. He's not only helping to put together the gigantic conference that's going on in Singapore at the Capitol, but along with that as well, he's also working on a very interesting side project at CoinMarketCap called Interest, which I'm very interested to talk about as well as we go throughout the conversation. So Spencer, thank you for making the time, man. It's a pleasure to be sitting down with you.
It's my pleasure too.
Awesome. And so I'm really curious, we've got the Capital Conference coming up. I'm not only curious to get kind of an idea of the numbers that you guys have, because I think being at the position that you are as CoinMarketCap hosting this conference, you're going to bring a lot of faces and names to the conference. So how many people are you guys expected to bring so far? And along with that, do you have any big kind of A-list speakers who are coming that you're really interested to have?
Thank you. So yeah, I think when it comes to registrations, we have seen some really very positive, overwhelming interest. So what we did this year was very interesting in the sense that we have this free proof of work tickets for attendees who, with some questions and stuff, asking, for example, like who is the founder of Bitcoin, other kind of things. They're able to essentially qualify themselves for free tickets. So I think we have over 1,000 people already registered on the ticket. And of course, we have a lot of paid registrations, VIP speakers, and so on. So in total, we expect a very, very nice mix of about 1,000 to 1,500 attendees at the conference, right? And we're really excited that we already have a lot of people who are signing up and telling us they're coming to the Capitol. In terms of the kind of speakers that we are able to, to have at a conference this year, I think we have a very broad mix of speakers from various backgrounds, providing fundamental liquidity in a space. For example, like CZ from Binance, Livio, who's the CEO of Hobby Global, and we have speakers from like Deribit and basically all the big names that you can think about in the exchange space, who are essentially providing liquidity to everyday users, right? And we also have some really interesting speakers, who are very focused on adoption. So we have, for example, companies that are really pioneering NFTs and so on. And we even have, a former SEC commissioner who is confirmed to actually speak at the Capitol that we have not actually announced on the site yet. So there's a little bit of a scoop for, your listeners that I love to throw out there. And we already, we just released the agenda on the website. So you can take a look at the agenda. I think we detailed out the sessions that will be happening for the 2 days, and we're really excited about the speakers.
Yeah, I think it's awesome. You guys have such a range of, I think, the faces that are kind of changing the crypto space that have stuck around throughout the bear market and are really kind of playing a role in this next resurgency that I think we're stepping into as we go into 2020 and 2021. And I think it's an interesting spot because Singapore, I think, as you very well know, Spencer, Singapore, I think it's one of the underestimated hot spots for crypto on the global stage. I mean, a lot of people talk about Malta, but I think Singapore, with the regulatory framework it provides, there's so many awesome projects that are out there.
Yeah, totally. I think when we thought about where to host the first inaugural capital, we thought that Singapore is a great location just because there's so many companies registered in Singapore. There's so much activity happening in Asia. And we thought that, hey, as a company with a very global view, we want to make sure that we shine the light on the region, which is Asia, which is the world. And having that in Singapore is a really nice sort of a place. That being said, we are like a traveling circus. So next year, we're actually picking a different capital city. So it could be actually the capital city that you and your listeners are in. Yeah.
That's awesome. Well, I'm interested to see it continue to expand. If you guys can bring those kind of numbers of people together, I think the capital is going to continue to be one of the big conferences alongside Consensus and the Delta Summit. And I'm really curious, I'm excited to make it out to the conference as well, but I do want to spend some time now, in this case, Spencer, to talk about what you guys are working as the head of side projects at CoinMarketCap, and that's interest. Now, I've talked a lot on my channel about the expansion of the DeFi movement, and we've been seeing all of these lending pools starting to come out. It's something I've been wanting to see for over a year now. And we're finally starting to see some really user-friendly tools that you guys are building that are helping to manage and find the best rate of interest on the market. So could you talk a little bit about what interest is about so people could get an understanding of it?
Yeah, thanks. I think when we thought about new products at CoinMarketCap, as you know, we provide the most information and the most up-to-date information about cryptocurrency prices across exchanges, cryptocurrency asset pairs, and so on. And so we asked ourselves, what are people leaning towards, right? After they have, for example, found their first exchange, bought their first cryptocurrency, and started learning more about the space. And I think what we saw in the past 1 or 2 years is that a lot of people were very, very interested in figuring out ways to use their cryptocurrency, whether it's to lend other people, whether it's to borrow, or whether it's to stake and other things, right? So we thought that, hey, let's start with something that people can understand, and which is why we built interest. So interest is really meant for regular users who want to earn crypto using crypto, or to even borrow crypto for whatever purposes, right? Whether it's for for speculation, whether it's for working capital, whether it's for anything, right? Anything that people can use. And we thought that it would be pretty cool. And we saw, of course, a lot of services in the space, like from Nexo, from Crypto.com, from Binance, and the DeFi movement, of course, the different products available. And of course, there's different interest rates that many of these products offer. And we thought that, hey, how can we essentially help to synthesize and break this down in an easy way for people to be able to understand. So I think that's kind of the genesis of the idea behind interest. And I think at the end of the day, this is the first step, right? We just literally launched this week. So I think as we get feedback from users, we hope that we'll be able to learn more about the space together with influencers and community members like yourself, and also anyone in the space who's just really passionate about this area, right? So far we've heard some really good feedback. I think, of course, a lot of providers are reaching out to us, asking us to be listed as with exchanges and so on. So we are definitely carefully curating and hoping that there'll be more information out there. Yeah.
Well, I think it's awesome. I mean, the user experience looked very clean. And I think, as you mentioned, Spencer, there's a lot of markets that already can benefit from this. There's obviously the clear use case of margin trading, where people can put up collateral and double their exposure, or triple in some cases, depending on what platform you use. Some of them are more centralized. Some of them are decentralized as well. You have pools like Celsius Network and Compound. And then also as well, the other use case that I think is quite interesting, as you alluded to, was the use case of working capital. And there was a story a while ago that a company had actually generated DAI from MakerDAO with their Ethereum as collateral, and they were able to help provide expenses as Ethereum's value went up. So they used Ethereum as collateral and were able to generate more stable coins over time. So I think there's an interesting use case here outside of just margin markets as well, and I think we'll continue to see an expansion of that as this market grows out and more users come to crypto.
Yeah, I really like the example that you gave earlier about how people are really using it in a very real way for their companies. And I think maybe going forward, we'd love to feature some of those real stories, right? So that people understand that, hey, it's not just about maybe borrowing and lending for margin trading and so on, but it's like there's so much real use cases that people are doing. And I think that'd be very interesting to see if we can share some of those use cases.
Absolutely. And, either way, on either of those markets, and I think the ones that will continue to expand to in broader credit markets on the globe, I mean, the cool thing about it is that this is really opening up some very high yielding markets that were only originally open to banks before. What it tends to be in the common world is that a bank is going to take your safety deposits or money that's in your savings account, and they're going to go take this money and use it on all kinds of lending markets, and they're going to make tons of interest. And they pay people, I guess here in the US, I don't know how it is in Singapore, the average rate is 0.09%. It's abysmal. It's terrible. It's not even a full percentage point. So yeah, I think honestly what you guys are doing, what the whole DeFi space is doing, it's so heartwarming, because I think it's going to be the thing that really leaps us from less than 1% global adoption to a multitude of individuals across the world using crypto. So I'm happy to see that you guys have done that.
Yeah, thank you. Yeah, I think in terms of information as well, I think what I would personally like to see, of course, we can only track and show information that is provided out there. So that there's still a lot of information, like, for example, actual amount of user deposits, and so on, that, we still need to be able to surface out. So I think those are kind of interesting. And I also have this analogy where I think a lot of the, essentially interest rate products in the space, in our space for DeFi and also other related things, many of them I think are essentially, there's two clusters, right? One is the decentralized essentially protocols that essentially powers this DeFi movement. At the same time, there's also, I think, more centralized, almost like financial services on top of decentralized assets that we have, which is cryptocurrency. So, it's kind of funny how, if you think about it, decentralized finance really mean a lot more than just, I think, the decentralized protocols, but also whatever we can do with decentralized assets.
Absolutely. And I don't mean to give it a harsh term, but some people in the space have called it CeFi and DeFi. So there's DeFi, which is like compound, and then you've got your more centralized networks that even might pay a higher interest rate, for example, like Celsius, and then also I know Binance recently launched their recent lending program. So it is this kind of range of, depending on, do you want less risk? Do you want more of a counterparty risk? Or maybe some people view having your money in a smart contract like compound is more risky. So you get this freedom in this case, but it still requires some education, I think, to really get that picture across to a lot of people. But anyways, honestly, Spencer, I think it's awesome that you guys are experimenting this. I'm glad I sense that same passion in you that I see in everyone in the DeFi space, because once you get it, it's like reading the Bitcoin white paper for the first time. You go down a rabbit hole. But outside of that, not only getting engaged with interest, but where can people find more information on the conference and everything of that sort? I'm assuming it's through coinmarketcap.com is the best place to go to.
Yeah, so we have a dedicated conference website, but of course you can definitely find our link from the website coinmarketcap.com. But you can also go to like conference.coinmarketcap.com, and right now we have published essentially a list of speakers that's being updated. I think 90% of the speakers are already on the site, and then we have, I think, most of the agenda on the site as well. And next week we're actually going to be sharing side events, right? What's a crypto conference or blockchain conference in our industry without side events, after parties, and so on? And I'm sure everybody looks forward to that. So we're publishing some of those details, and you can also, anyone in the space who's like looking to organize a side event, they can also, and we would love to help them to, invite folks to the event and so on. Yeah.
Awesome, Spencer. Well, we'll keep up with it and stuff. We'll leave any relevant links down below as well for you guys to check out the conference or check out interest. But Spencer, thank you very much for making the time, man. It's always appreciated when you guys get some time to chat. I know you guys are working around the clock on the crypto time schedule, 24 hours. So I always appreciate it, man. And it's a pleasure getting to chat with you.
Thank you so much for your time and just talking to us about what we're working on too.
Absolutely. There's a lot of exciting things going on.